Joining us now is Jie Yu, a Chatham House Senior Research Fellow on China. Doctor, it's a pleasure to talk to you. What do you expect next week as we continue the NPC?
Well, what we would expect is we're going to expect the Parliament to approve the detailed 14th five-year plan. And that five-year plan is not only talking about the Chinese economy in the 5 years, but actually how to fulfill the target for Xi Jinping to doubling the Chinese GDP by 2035. So it's actually essentially a 15 years plan, and that's much they will have to talk about it. So on the economy, but apart from the economy, they're going to talk about foreign affairs as well. Of course, I mean, with all these difficulties between China and United States, and most really how China will be able to manage even more precarious Sino-US relations, and that would also be dominated discussion as well. So I think both on domestic side and also on foreign affairs front as well.
You talk about those two factors, domestic and foreign, and it looks like things are going to get tougher in terms of the relationship with Washington and potentially Europe. We'll see what happens there. Is that the reason why we've got this cautious 6% growth target?
Not necessarily. I think this is very much in line with what happened with the two sessions last year. Now, last year they had the two sessions in June. I mean, already did not really set a target, but by saying they like to improve the quality of the economy to make the economy become more sustainable. So I think this is very much in line with the leadership thinking. So I'm not surprised at all, to be honest. But much of the emphasis will also be put into innovation sector, how China will be able to upgrade itself, to achieve that sense of self-reliant supply chain on higher technology sector. And these are the key things for the 14th five-year plan. And these are also the key things going to be discussed next week as well.
So draw some lines for me on that. So if they become more self-reliant, they're going to wind up importing less. What happens to their exports in that a lot of other countries want to be self-reliant, and specifically they don't want to have ties to China? Just look at what happened with Huawei and the Made in America theme that President Biden's going with. How does that affect their current account surplus? Like, what's the trickle through?
I mean, it's actually a gradual erosion of export earning for China. It happened already for several years. This is nothing new. And what is really new is that what kind of export that China decided to sell sooner or later. I mean, we might have this discussion later about, carbon neutrality. And part of the reason why Xi Jinping introduced this whole idea of carbon neutrality, it is also to looking for alternative market for the Chinese renewable sector, that renewable sector be able to selling their renewable equipments, and that would be also a crucial source of export earning as well. So in a way, it's about upgrading, it's about the balance of payment, but it's also about how to selling something differently.
How should investors be reading higher defense spending?
Defense spending, again, that's very much in line with what we discussed on innovation. So much of the money will be given to innovation that would be either on civil sector or on military sector or hybrid use of civil to military technology. But I think the military spending will be increased on technology, but not on personnel.
If you were in the Biden administration, what are some of the key words or languages that you would be looking for to understand how China wants to reset U.S.-China relations?
Well, I think the second paragraph on the 14th five-year plan said very clearly that the whole world now experiencing a power shift, and clearly China is one of the most precarious moment to dealing with the great power competition. I think the Chinese said very clear they would assume that U.S.-China relations were not getting any better, and they accept the fact as it is, as the reality, and therefore to deal with it by introducing the so-called dual circulation, internal circulation, increasing domestic spending and supply.
Dr. Yu, can China be contained? If you go back and you think about what kind of Cold War doctrine would have dictated, in the Cold War we tried to contain the Soviet Union. Is that something that can be achieved with China? And can it be achieved with China in key areas? Like technology?
Well, certainly George Kennan's long telegram still applies, seems, for the 21st century. But the problem is in here is that Soviet Union was an extremely isolated economy. It is only it's a pretty much one-dimensional economy. China is very different. It has really integrated itself into the regional economy and also the global economy as well. So if we're talking about contain China, Perhaps whoever issued that concern will also have that sense of self-harm as well. So to contain China perhaps will be easy. It may sound very ideologically appealing, but when it comes to practice, it's actually very difficult. I mean, just look at the FDI number. The outbound investment between the United States towards China has not really changed since Donald Trump came to power, which is to say that we are now having this ideological conflict with China. But then on the other hand, the economic world, the economics community consider China is still somewhere to be able to invest in and still a guaranteed return for the economy.